There is definitely a risk of markets correcting in near term in India and even in US. Let me explain you few things and share one wonderful option strategy that every trader should implement. It can give you very high returns at very low risk. Hi guys, welcome back to Options Decoded. I've been asked many times that why I sound bearish on markets these days. Every time the market comes closer to highs, I ask my subscribers to buy ITM puts and then we exit these puts fully or partially once they double or triple, or sometimes we trail our trades. So today, let me give you one fundamental reason and then share a strategy that every trader should implement from part of their capital. So let's begin. I firmly believe that RBI is behind the curve in terms of taking action, or we can say that it's late in reacting to the stuck reality of inflation. And it's not just India, even the US Fed is behind the curve, especially after the last inflation number that we saw for US. Let me explain this to you with some numbers. Our repo rate is 4% and targeted inflation as projected by RBI for fiscal March 2023 in last monetary policy is 5.1%. So that means that real rate of return, which is the difference between interest rate minus the inflation, is 1.1%. That should be the rate hike theoretically. I repeat, theoretically, that RBI need to do. Okay? But the reality is totally different. Inflation number that came last time was 6.95% and our 10-year GSEC yield is close to 7.25%. So against the believed rate of RBI of 4% and the actual market rate, the difference is 3.25%. Assumption of rate hike of 1.1% by March 2023 is somewhat not matching by the actual reality of the markets. So if inflation continues to rise in the same trajectory, and if in May we see inflation at 7% or more, then RBI is certainly behind the curve. Now let's talk about US. The last inflation printed number for US was 8.5% and their GSEC yield for 10 years is less than 3%. They have a catch up to do roughly of 5.5%. As of today, US markets are not believing that Fed is going to do 7 hikes this year. 5 is what markets are anticipating, but the 7 is the extreme case. Right now, even the 5 is too much for the markets to discount. So in reality, either the inflation in US has to come down drastically or the rates needed to be increased or hardened very quickly. Else, situation can worsen. All of this will have its own repercussions on the valuations of the market. So there need to be the reset in terms of expected rate of return from the markets. Only one thing that can save markets from bigger correction is that if we have a very high growth rate, that only can take care of this. But looking at various sectors, that's tough to happen. Currently, we see that in India, the real rates are marginally positive because the inflation last time came at 6.95 and 10-year GSEC yield is 7.25. That means we are marginally positive. But the repercussions will be there, both in India and US. So markets will get corrected or we might see a bearish year altogether. This was one of the reasons. Gradually, I will share a lot of leading indicators that are not just technical but linked to the economy or other macros. This will open doors to your analysis. Now comes a strategy that every trader should implement. You should park at least part of your capital in this strategy. Before this, how many of you have gone through my video on options trading for small capital with backtested results, where I shared my strategy that were much better as compared to other market neutral strategies, and I shared the backtested results of the same. You can see it for yourself that my strategy gave you 3 to 5 times return as compared to the other market neutral strategies like short iron butterfly or short iron condor. So you can see this on the chart for yourself. But that strategy was for other situation. Now what I am sharing today is to benefit from the correction that is expected for this particular calendar year. In this strategy, I am not comparing it with short iron butterfly or short iron condor, as this we are implementing for future moves. But once I and you implement this strategy, we will share the returns with each other on this channel or on the Telegram channel. But to understand this, we'll suggest that you firstly go through my video. The link is in description as well as at the corner. After this, you'll be able to understand and implement this strategy easily. So, what we do now? Let's say markets are currently close to 17,200 levels. So we will be shorting 17,100 call and put for this week. What I mean is that we will short call and puts of spot minus roughly 100 points and then hedge the same by shorting call strike plus 300 on the call side and shorting put strike minus 200 points on the put side. Okay. Let me just explain you with the example on the screen. So with current example, it will be like shorting 17,100 call and put. At the time, right now, when markets are close to 17,200 levels, we are shorting minus 100 points from the spot, right? Both call and puts. And what we are doing to hedge it for the put, 17,100 put, we are hedging it with 16,900, which is 200 points away, right? Put. We are buying 16,900 put. At the same time, for the call hedging, we are buying 17,400 call, which is 300 points away, right? I hope you get this point. Which means the payoff chart will look like the same on the screen right now. Here you can see the risk reward, maximum profit, maximum loss, and the break even. Now you can compare this with the screenshot of the last video. You can see it that it has the same potential, which means we can expect same rate of returns from this strategy. There will be drawdowns. We will see few weeks of losses, but eventually this will give us big profits. So, analyze this strategy and implement one for yourself along with me. And let's follow this and check out how much returns we make through this in this calendar year. I have already implemented this strategy when we came closer to 17,800 levels recently. And in last 2 weeks, thanks to the market closing below the opening levels, I was able to make decent returns. Now from this Thursday onwards, all those who will implement this strategy, we all actually, can track this together for some long-term returns. With this, let me end this video. I hope you guys liked it. If yes, then like the video, subscribe to the channel, join me on Telegram, and let's create some difference. Till next time, as always, happy learning.